Good afternoon, everyone. My name is Veronika, and I'm pleased to welcome you to the online webinar Pom Portfolio as a funds diversification instrument. Today I'm going to speak with you about the definition of Pom Portfolio. Also today I'm going to tell you what are the key elements of a Pom Portfolio, how does it works. The next one question, what are the key indicators we should pay attention to when we making a structure of the Pom Portfolio. Also today I'm going to speak with you about the formula of the yield on the Pom Portfolio. And of course, today we will try to invest in the PAM account, on the company side, in the PAM portfolio rating, and we'll try to create our own PAM portfolio. Okay, first of all, I want to speak with you about the PAM portfolio, about the history briefcase of this instrument. And the Pom Portfolio service was launched by Alpari on 8th of July 2012. In general, PAM service was created by Alpari on 21st of September 2008 and has received numerous prestigious awards, been selected by investors more than 40 countries, from 40 countries around the world. Also, this service brings together the largest number of managers and more than 650,000 of investment account. What else is interesting that PAM Portfolio is an investment product that can contain an unlimited number of PAM accounts. And here the manager only manage the PAM portfolio structure, but don't trade. This is one of great opportunity of the PAM portfolio, that you don't need to trade, but you can receive remuneration for your successful management. What about the key elements? Each PAM portfolio begins with manager's investment account, where all funds of the manager are allocated. The manager's investment account based on the manager's capital. This is non-withdrawable balance that can be removed only after liquidation of a PAM account. The manager's capital is different and depends on the type of the PAM account. For a public, and depends on the type of PAM portfolio. Public PAM portfolio, here the manager should deposit $1,000, 1,000 euro or 1,000 GLD, and if the manager wants to open a private PAM portfolio, it's enough $100, 100 euro or 100 GLD. The difference between these two types is as follows. Public PAM portfolio from the first day of existence is inside the PAM portfolio ratings on the company side. The private portfolio cannot become a public portfolio or participate the ratings of the PAM portfolio on the company website. The private portfolio creates for the people whom you know, if you are a manager, and for people with whom you connect and where you can send the referral link. Because to invest in this private portfolio, an investor should have this special link from the manager. Public portfolio, as I said, participate the ratings from the first day of the existence. Okay, let's continue. And the next one element, this is PAM portfolio structure. It's flexible and it could contain an unlimited number of PAM accounts, depends on the PAM portfolio manager strategy. But the optimum the optimum quantity of the PAM accounts inside PAM portfolio is equal to 10 PAM accounts. It's enough. But you can include more, of course, PAM accounts inside PAM portfolio. The next one element, this is request planner. The request planner may be accessed around the clock and contains 24 hours as a day. Each hour in request planner is called rollover. Rollover could be open and closed. In an open rollover, information is updated and requests for depositing in withdrawal funds are executed, while in the closed rollover, all information is updated. Request planner works by Eastern European time. It's equal to GMT +2 today. Request planner should contain at least one open rollover per day that investors could deposit or withdraw their funds. This is one of the most important advantages of the PAMM account service. Okay. Request planner also contains threshold. This is the next one element. Threshold, this is the period of time before an open rollover. If the request of investor has hit the threshold, meaning that his request will be replaced on the next open rollover. Let's consider an example. Let's guess that an open rollover is set by 11 a.m. and as you can see, the threshold may be of 1 to 24 minutes, of 1 to minute to 4 hours. And if the threshold on the PAMM is equal to 4 hours, 11 minus 4 hours, this is 7 a.m. That means all requests that are applied before 7 a.m. Will be executed at 11 a.m. And all requests that has hit the threshold and is applied between 7 and 11 a.m. will be executed at the next open rollover. Okay. The next one element, this is the manager's proposal that may not exceed 15%. It could be less, but not more higher than 15% of investor's profit. Here, as I said, manager receives his remuneration for the successful managing of the PAMM account, of the PAMM accounts and of the PAM portfolio service in general, PAM portfolio in general, I mean. Okay, the next one element, this is investor's investment account. It could be unlimited number inside the PAM portfolio, no limitation. Minimum amount for investment is $100. And the last one element, this is the trading interval. It may be a quarter, and trading interval, this is the period of time after which calculation between manager and investor is made automatically. It means that manager will receive his remuneration and an investor will get his net profit after the trading interval. Trading interval will end for an investor after 3 months since investment. In instance, if I invest in your PAM portfolio today on the 5th of December, my trading interval in your PAM portfolio will end after 3 months. That means January, February, in March. In March, I'll pay to you remuneration if your managing of the PAM portfolio was successful. Okay, here we are, and now I'm gonna move on to the next one question, and now I want to speak with you about the return to date formula on the PAM portfolio. If you want to create a PAM portfolio, you should deposit it through my Alpari. You can deposit it through the credit card or through the terminal, I don't know, from another source you can do it. You can do it only through my Alpari. Let's guess that you deposit $1,000. Inside the Pom portfolio, there are two important parameters. This is equity and let's say free equity. Equity, this is all funds on the Pom portfolio, and free equity, this is funds that are not distributed among the Pom accounts. Let's guess that you distribute this $1,000 through 4 Pom accounts. First Pom account you deposit with $300. Second one was $200, the third one was $100, and the last one with $400. The Pom portfolio yield can be calculated through the special formula. Okay, return to date, let's express it through this sign D. Return to date for the Pom portfolio is equal to the share of the first PAMM account inside Pom portfolio multiply on percent plus or minus the share of the second PAMM account inside Pom portfolio multiply on percent plus minus the share of n PAMM account multiply on percent, because I don't know how many PAMM accounts you will include inside your Pom portfolio. We have only 4 PAMM accounts inside the structure. Because of this, let's try to guess how much each of them can bring to the Pom portfolio. Let's guess that the first PAMM account made a profit plus 10%. The second one, of course, also receives profit plus 5%. The third one, unfortunately, have a drawdown by 15%. And the last one receives plus 10%. Okay, here we are. Now let's count it up with this formula. This is the share inside each PAMM account, and this is the percentage. And here we have $300 multiplied on 10%. It's equal to $30. The second PAMM account brings about $10 to the Pom portfolio profit. The next one PAMM account, unfortunately, lose minus 15%, $15, and the last one plus $40. Okay. Now we have 15, 25 and $65. This is the net profit of the Pom portfolio. As we see, we deposited $1,000. Because of this, if we divide $65 on $1,000 and multiply on 100, we'll have 6.5%. This is Pom portfolio yield. And of course, here I want to pay attention to the share, each share. As bigger a share of in the Pom account, and the more influence on the Pom portfolio yield in general. As you can see here, $300 in the first PAMM account plus 10%, this is $30. But if, for example, on the first PAM portfolio we deposit only $100, we've got $10, not $30. Because of this, I said that the total result depends on each share, on each PAM account, and on their result, financial result in general. Okay, let's go back to our presentation. And now I want to continue with the PAM portfolio advantages for the management and for an investment. As you can see on the slides, if you want to manage your own PAM portfolio, you will have the following advantages. First of all, you can have hedging of funds through the risk level, this diversification among the PAM accounts. That means you can choose the PAM accounts for your PAM portfolio with different risk profile. Conservative PAM portfolio, moderate PAM portfolio, and aggressive PAM portfolio. And through this distribution, you can hedge your funds. And in the case of losses on the one of them, the second another will show, for example, the positive returns. And in general, your yield, your PAM portfolio yield will be positive. Minimization of risks through funds allocation by shares. I said to you now, what does it mean? If you want to have a reliable PAM portfolio, you should deposit the biggest amount of your funds to the PAM accounts with the stable graph and with the reliable strategy. Flexibility of PAM portfolio structure. Of course, you can add new one PAM account inside PAM portfolio. You can remove PAM account from PAM portfolio. You can change the shares inside PAM portfolio, of course, shares of money, I mean. Because of this, the structure is flexible. Reward percentage downsizing in the PAM accounts. As you know, the PAM account the PAM accounts proposal could be multi-level or single level. Single level means that no matter how much money you bring to the manager of the PAM account, from $10, you'll pay fixed percentage of reward. For example, 50%. This is the maximum in the PAM account. And the multi-level proposal means that the greater the balance you deposit to this PAM account, the lower the percentage reward. For example, if you invest between $10 and $100, you'll pay 50%, okay? And from $100 to $300, for example, you'll pay about 40%. More than $300, about 30%, for example. And you can, as the manager of PAM portfolio, you can downsize this reward percentage by depositing more funds to the PAM account, as I said in this example. The next one advantage, you can receive 15% reward for successful, not trading, sorry, here is not right, for successful managing. For successful managing. And of course, comfortable Pam Portfolio Constructor is waiting for you. Okay, here we are. The opposite opportunity, what you have, you can invest in the Pam portfolio of another manager. You can choose it from the Pam portfolio ratings. There are a wide choice of indicators, and the minimum investment amount to the Pam portfolio is $100. Also, you can withdraw your funds once a day. And you can see the structure of the Pam portfolio, but you can't copy it because you don't know the shares of which Pam account inside Pam portfolio. Because of this, you will not get the same financial result. High yield, of course, if compared with another financial instruments, for example, bank's deposit. And low reward percentage, 15%. Okay. What you want to choose, you should decide yourself. I described to you all opportunities inside this service. Okay. How does the Pam portfolio work in general? This is simple. A Pam portfolio manager creates a Pam portfolio, allocating a certain amounts of their initial funds at the manager's capital. Okay. After that, of course, the Pam portfolio manager should provide special documents to take your investments, and only after this he can open a public proposal. Not more than 15% of your profit. Okay, after that you're searching through the Pam portfolio ratings to find the special Pam portfolio for your investment, and then of course you deposit funds to the Pam portfolio. Distribution of profits and losses will be made automatically in the end of the trading interval on the Pam portfolio is equal to 1 quarter. What else? The distribution of profits and losses on the Pam portfolio is the same as on the Pam account. It's made automatically in proportion of funds that was introduced in the Pam portfolio. And here we can see an example. The Pam portfolio manager deposited $2,000 to his Pam portfolio, and he has 3 investors with $1,000 each of them deposited to the Pam portfolio. Here we can see $5,000 in general in the Pam portfolio, and the next one slide will show us how the distribution of profits on the Pam portfolio is in general. Let's guess that Pam portfolio received $200 plus as the profit. First of all, the manager will receive his profit, his manager's compensation, let's say like this, 15% of profit. And after that, the last funds, this is $170, will be distributed through among the participants of the Pam portfolio. Manager has 40% of all funds in the Pam account, and each of an investor has 20%. Means that manager receives $68 and each of investors receives $34. Here we are. Okay, let's continue. And now we are ready to know how to invest in a Pam portfolio. To do this, I want to move on to the webcam that you can see clearly all information on the company website. Okay. Here we are. let's open the company website, the tab Investments and Pam Portfolio Rating sub-tab. Open, please. Here we can see all Pam portfolios that are existing in the Pam Portfolio service. In general, there are about 537 portfolios. What we can see here, if we click on this button, we can see all indicators that can help us to choose the Pam portfolio for investment. Also, we can click on the help link. Here we can see the main parameters of the Pam portfolio. You can read all this information, and also we can see the conditions that Pam portfolio could be included in the rating. Positive rate of returns, as I said to you before, it should be available to invest it in. That means that the manager should have a public proposal created over 3 months ago, and manager's capital $1,000, 1,000 euro, or 1,000 GLD. Okay. If we want to invest in the Pam portfolio, of course, we should open the Pam portfolio monitoring. Here we can see 3 main tabs: return to date, composition, and discussion. Composition, this is the Pam portfolio structure. In the header of the Pam portfolio, we can see the main button. This is invest funds button. We can see that an investment begins from $100. Rate of returns, number of investors, manager's compensation. Remember that it could be less than 15%, but not higher than 15%. Okay. Since opened, the Pam portfolio age, and the place in the rating. First tab that we can see, return to date, showing the yield graph. We can see the periods of time: 1 year, 6 months, 3 months, and 1 month. Also, we can see the chart under the yield graph with the same parameters, with the same figures. Time to complete your request. This is request planner that accessed around the clock. We can see that all hours inside the day are opened, and we can see 1 minute threshold. If the manager has currently active Pam portfolios, we would see it here, but he hasn't. Okay, the second tab, this is composition. We can see all Pam accounts that are included in the Pam portfolio structure. Also, we can see statistics. Here, this daily return volatility. The higher the volatility, the more aggressive Pam portfolio in general. Recovery factor showing is if the manager has overcome his historical drawdown. Maximum daily loss and maximum daily profit. This is special indicators that we can see what the highest point the manager could receive per 1 day, and the biggest loss for 1 day. Okay, also we can see maximum drawdown. I can say that this is maximum relative drawdown, that showing how much percent investor could lose with this manager if invest on the highest point on the graph and withdraw funds on the lowest point on the graph. And maximum profit, maximum relative profit, showing in another way how much money, how much percent an investor could receive with the manager if invest on the lowest point on the graph and withdraw funds on the highest point on the graph. Okay, here we are. And the next one tab, this is discussion tab. Here you can see important information, ask question to the manager, and of course discuss Pam portfolio strategy with another participants of Pam portfolio. To invest in Pam Portfolio, first of all, you should log in to my Alpari. Let's do it. Okay, you should find the Pam Portfolio on the company website in the Pam Portfolio rating. After that, click on the Pam Portfolio name, and after that, click on an Invest Funds button. The system will replace us to my Alpari. Here we should fill in a deposit amount more than $100 because minimum investments is $100. You should select transfer funds from an account where you have funds. And after that, you should pay attention to transfer date where your request will take place on the 5th of December at 7 p.m. After that, please click on an Invest Funds button. Okay, after your request took place in the Pam Portfolio, you can look after your investment in the tab My Investments in Pam Portfolios. Here will be all information about your investment in this Pam Portfolio. Okay, let's back to our presentation. Here we can see the next one slide with information about the main indicators to choose the Pam account for a Pam Portfolio. And before we begin choosing a Pam accounts to Pam Portfolio structure, I want to remind you about the investment outline that you should have before you create your Pam Portfolio. First of all, you should define the comfortable amount of funds, amount of investment, comfortable for your budget. After that, you should decide after which time you need that your money back on your account. That means in an investment period. Also, you should decide what is allowable drawdown and when you should finish your work with the Pam Portfolio. After that, please write for yourself financial goal. That means desired yield, and define it with the period of time after which you want to receive this profit, this yield as you want. And the last one, your risk profile. Are you a moderate, are you a conservative or an aggressive Pam Portfolio manager? After that, you are ready to choose the Pam account to the Pam Portfolio structure. And to do this, I want to show you first of all the Pam Portfolio Constructor. This is simple, and here you can see all Pam accounts that was added at this Pam Portfolio. Let's try to do this through the company website. We should open two pages. First page with the Pam account ratings, and the second one page, wait, we should open the company website. Okay, and in the second page we should open Build Your Own Pam Portfolio. Click on it. Here you can see that you can use the ratings to add Pam accounts to portfolio, or add Pam accounts to your portfolio from the list if you definitely know the name of the Pam account. Okay, let's try to do this through the Pam account ratings, and here we can see also this button with indicators. 1 minute ago we have known which are the main indicators we should use to choose Pam portfolio structure. First of all, decide which type of the Pam portfolio you want to create. For example, let's try to create a moderate type. Here we can see the special indicators such as volatility. This is yield movement dynamics within a day from minimum to maximum, volatility influences aggressiveness and indicate the risk level of the PAMM account in general. Recovery factor, as I said, showing if the manager has overcome his historical drawdown. Leverage used, this is an indicator that showing the risk of the strategy, a level of this risk. And the higher the score, the riskier the strategy of the manager. Age indicates an experience of the PAMM account manager, and manager's capital more than $3,000 from the beginning. You should choose the PAMM account with such manager's capital, because all managers' funds are allocated in the trade, and managers in the first group of ratings of course more interested in their financial results than managers in the second group of the ratings, because their managers' capital higher 10 times than of the managers that are in the second group. For the manager from the second group, it's enough to have $300 to open a public PAMM account. To take place in the first group of the rating, PAM account should have manager's capital more than $3,000. This is kind of additional incentive in, that manager really will try to get the best result, because his funds also involved in the trade, and he takes risks. He take risk on the par with you. Okay, if you want diversified portfolio, you should include 60% of conservative PAM accounts, 30% of the moderate PAM accounts, and 10% of the aggressive PAM accounts in the structure. And here you can see that this composition is recommended but not required. Okay, let's try to create a PAM portfolio. Here on the header of the PAM account, we should choose volatility, of course, for the quarter. Let's try to do this. Volatility, recovery factor for all time, leverage used, average. Also, what else we should choose? Since opened we have stars, we have equity, manager equity, account denomination. Here also you should pay attention to, because you can lose money on conversion of the currencies. For example, if you add PAM account with euro to PAM portfolio that's denominated in GLD or in dollars, you can lose money with the courses of PAM portfolio and of the PAM account, which differ between them. Okay, here we are, and let's choose the indicators for the moderate PAM accounts. Since opened more than 6 months ago, leverage used, average, fewer than 40 units. You can write figures down here yourself. Recovery factor more than 1 unit, it's enough. Volatility for 3 months is less than 6%. Account denomination, let's choose dollars. And 1, 2, 3, 4. Okay, where is the manager's capital? Manager's equity makes. Okay. Manager's compensation, drawdown, volatility. Manager's equity. Strange. Manager's capital, okay. Manager's capital, more than $3,000. Okay, now we are ready to choose the PAM account for our PAM portfolio structure. To do this, just open the short description of the PAM account. Here you can see this sign of portfolio. Click on it, and after that you can see this PAM account in the PAM portfolio structure in the constructor. After that, you should choose at least 9 PAM accounts after first one. It's enough for the PAM portfolio structure. Choose the PAM accounts, try to choose the PAM accounts with positive returns to date, rate of returns, better to say. Okay, what else? Wait for a minute, please. We have problem with our battery. Okay. Okay, it's okay now. Let's continue. We should add 7 more PAM accounts to the PAM portfolio. It's recommended to find PAM accounts with positive rate of returns. Okay. What else? ATM. We can choose this one. How many? 6 PAM accounts, 4 more. Okay. Let's see what we have now. 1, 2. Also 3 and 1 more. Let's see here, 1 more. Okay. Okay, now we have 10 PAM accounts inside the PAM portfolio structure. We can see here the PAM portfolio denomination. You can choose here, and you should choose here dollars if all PAM accounts in the PAM portfolio have this denomination. Of course, that should be the same with PAM portfolio. You can change location. You can change shares in each PAM account inside PAM portfolio. Also, after PAM portfolio begins trading, you should do it not automatically. You should do it yourself and transfer funds through the free equity on your PAM portfolio. You will not be able to allocate the shares like this with percentage. Okay, if we go down, we can see here the minimum investment amount for a public PAM portfolio. This is about $1,000, and for a private PAM portfolio, it's at least $100. Here is we can see an invest tab, and if we scroll scroll down the page, we can see the PAM portfolio performance. What could be if we invested in this PAM account 1 year ago and don't touch the shares inside the PAM portfolio, don't relocate the PAM portfolio structure. Here we can see that we could earn more than 78% per 1 year. Okay, if we want to invest in the structure, just click on the invest funds, on the invest button, sorry. Now the system will replace us to the Alpari, where we can choose the PAM account, an account where we have funds, where we can choose the currency of the Pom Portfolio, dollars. If we want to make this Pom Portfolio private, we should put their sign. If we want to have a public portfolio, it's okay. Don't do anything. Don't do anything. Amount to invest should be more than $1,000. Here we can see also transitory account. We should select the one of them where we have funds. And after that, click on the Create Pam Portfolio button. After all funds take place in the PAM accounts in accordance with their request players, with request planners of each of these PAM accounts, your PAM portfolio will take place in the tab My Accounts, PAM Portfolios, not My Investments in PAM Portfolios, My Accounts in My Accounts PAM Portfolios. Here you can find your PAM portfolio. Here is no one because our funds are not located in the structure now. Okay, here we are, and in general we are ready to end our webinar. And let me to recap our webinar in general. Today we have learned what the PAM portfolio is. Also today I described the key elements of any PAM portfolio. We spoke about the formula of rate of returns for the PAM portfolio. Also we have learned advantages for the managing of the PAM portfolio and for investment to ready PAM portfolio. After that, we have known how does an indicator's influence on the risk profile of the PAM portfolio. Also, we spoke about the PAM portfolio monitoring, how to invest in a PAM portfolio, and we have learned how we can work with the Pom Portfolio Constructor, how we can choose the PAM accounts from the PAM account ratings in accordance with special indicators. And in the end, of course, we created a PAM portfolio. Okay, I hope this webinar was useful and interesting for you. I wish you the best. Bye.